We think the business cycle peaks sometime in end of 2025, and that would suggest a crazy sort of target that could get somewhere between $500,000 and $1 million in Bitcoin. Do I expect that? Probably not, but who the hell knows, right? These cycles can be crazy, and this one feels more like the 16-17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing. Well, not in the US, but central bank balance sheets were rising. We saw 20% growth, and what happened of liquidity, and what happened was crypto absolutely exploded.
Welcome back to Money 101. Real Vision's founder and CEO Raoul Pal has unveiled bold price predictions for Bitcoin, Ethereum, Solana, and the entire cryptocurrency industry in the anticipated 2024 and 2025 bull market. As we approach what many anticipate to be an unprecedented Bitcoin and crypto bull market, the former Goldman Sachs executive recently shared a compelling analysis highlighting the intricate correlation between crypto, technology, and macroeconomics. Pal envisions the 2024 and 2025 bull market as unique, coined as both a crypto and macro summer. Anticipating a convergence of favorable factors, the Real Vision CEO foresees a substantial surge in crypto asset prices. He predicts Bitcoin reaching over $200,000 per coin in May and soaring to $1 million per coin by the bull market's conclusion. Pal posits that a global economic reset occurred in 2008, when major economies recognized stagnant or declining factors crucial for GDP growth, such as demographics and productivity growth. Despite this realization, debts continued to accumulate, reaching 100% of GDP for many economies. To postpone the inevitable, central banks opted to absorb the debts onto their balance sheets and intermittently print money to maintain economic stability. Pal maintains his bullish stance on asset prices, asserting that central banks will persist in injecting money into the economy, sustaining asset prices indefinitely. However, Pal cautions that traditional asset classes aren't experiencing genuine growth, merely responding to continuous liquidity injections without real value appreciation. The constant liquidity injections pose the risk of ongoing currency debasement without a corresponding increase in purchasing power. Pal's thesis contends that everything is disrupted, and the solution to the GDP predicament lies in boosting productivity growth. Crypto, technology, and the exponential age, according to Pal, play a pivotal role, fueling his optimism in these asset classes. This presentation by Raoul Pal is a masterclass you wouldn't want to overlook. Watch the video in its entirety, subscribe to the channel, and remember to give the video a thumbs up if you find it enlightening. Thank you, and enjoy the content.
I care about secular trends. Secular cycles, when you get them and capture them in the right point of the business cycle, become explosive. Remember that chart of the NASDAQ, the beach ball underwater exploding above the water because the Fed just took the foot off the gas pedal? Or the brake, sorry. That's the power of a secular trend. It outperforms any other trend, and it's more calibrated to financial conditions. It's more juiced by the business cycle than anything else. These are the things that matter to me. And there's two massive secular trends that dwarf all others. Crypto. Here's the chart, the long-term chart of Bitcoin since 2013. Some people use this chart longer term. I used to. But the early cycle was so kind of ridiculous that it screws up the chart. Other than that, it's actually a perfect log trend. These cycles can be crazy, and this one feels more like the 16-17 cycle than it does the prior cycle. And that cycle didn't have a lot of central bank printing. Well, not in the US, but central bank balance sheets were rising. We saw 20% growth, and what happened of liquidity, and what happened was crypto absolutely exploded. I kind of feel like that's the case. I don't focus on the end target, I focus on the structure. But I'm just showing you the magnitude of the opportunity, and we're still at one standard deviation oversold. It's all to play for. We've barely started. NASDAQ, another beautiful logarithmic trend. I mean, this is a killer. It's all you need to know. Is the world going to be more digital tomorrow than it is today? Yes. Will it be more digital in 2 years' time than it is today? Yes. Will technology reach more adoption in the coming 2 years? Yes or no? Yes. I ran that poll on Twitter, 95% of people agree with me, yet most people keep missing this trend. They don't want to believe it. It's expensive, I think it's a bubble, blah, 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 blah. Meanwhile, best fucking trend you've ever seen. So just capture the trend. It suggests the Nasdaq somewhere between 25 and 30,000 at the end of this cycle. That's another great set of returns. So those are the two mega trends. How do they compare? Well, simply put, going back to 1990, kind of the dawn of the internet and computing ages, the Nasdaq has just relentlessly outperformed. All of the noise you see on Twitter, oh, mean reverting, the Nasdaq's expensive, blah, 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 blah. It is the biggest trend you've ever been given. And many of us in macro land didn't see this. We kept fighting it because of what happened in 2000. The bubble and bust. But that, as you can see, was extraordinary. The rest? Super smooth. It's the same log trend. And I don't see that changing. Could we create another bubble based on AI and the exponential age? Sure. Let's make some bloody money from it, as George Soros would say. But I don't see any elements of a bubble. It's just a normal trend that eats all other equity sectors alive. There is no point owning other stocks. Every other bet is suboptimal in this world where everything is correlated. I talked about the fact that the ISM is a repeating cycle since 2008 because of the debt refi cycle. So future ISM looks like past ISM inverted. So it suggests that we keep going into 2025, the end of 2025, which I've shown you a number of different formats. And with that goes liquidity. I showed charts earlier how liquidity and ISM all go hand in hand. There's the chart, global liquidity, and the Nasdaq just keeps going up. What a beautiful chart. That's the trend we're trading here. It's easy. Same with Bitcoin. The reason the Bitcoin correlation is actually lower than the Nasdaq is because of these super spikes on the upside, because it's so skewed to the right tail, which is amazing. So now when we put this all together, we can actually forecast using a number of proprietary things we use at GMI out into the future. Please do not expect this to be a crystal ball. Do not expect these exact targets. It's directionally going to give you an idea of what the next 2 years look like. It gives you that target that we talked about before of about 21,500 in the Nasdaq by May or June of next year. With Bitcoin, it gets even more interesting. You see, that gives us a kind of extraordinary set of numbers, which make me think that these are overstating it. So I'm just going to assume that we'd halve these. Maybe they're right. I don't know. We'll have to see. The everything code is new. Yes, it's worked in the past, but who knows? Because it gives us crazy numbers like 218,000 by May. That's post-halving, post-ETF. It would give you a target of $500,000 by 2026, which is in line with the log trend. So it's possible. Doesn't feel like the most probable outcome. Feels a bit ludicrous to me. But anyway, directionally, half the numbers. Assume Raoul is a total moron, which certainly my wife would do. Then you still get great numbers. So it's all to play for. And that makes me interested. Now, Bitcoin's actually not the horse I'm going to back in this race. Crypto is the horse I back the most. The fastest horse in the race, best risk-adjusted returns, high correlations to this global liquidity index, which is our everything code. So we know how the asset price behaves, which gives us a competitive advantage when we use our proprietary frameworks. Beautiful chart here, Fed net liquidity and Ethereum. Bitcoin has actually outperformed Fed net liquidity, the beach ball underwater. Why? Because of the narrative around the ETF. In macro crypto spring, Bitcoin always outperforms, much like in macro spring, treasuries tend to outperform credit. Later, when we move to macro summer, alts, ETH first, Solana, others will start to massively outperform Bitcoin, much like junk bonds outperform treasuries. So ETH is just doing what it's supposed to be doing, but it's not giving us the big surprise. I think that surprise comes the moment the ETF is out in Bitcoin, and people will focus on the ETH ETF, and it'll bring the ETH ecosystem alive. This year, it's been a story of Solana, which I've been along all year, and Bitcoin. That barbell has been the best trade in the world. Well, in fact, just owning Solana has been the best trade in the world, bar none. But ETH, it'll play catch up. it'll do well.
Raoul Pal isn't the sole visionary with bold Bitcoin forecasts for 2024. In a recent interview with Coin Bureau, venture capitalist Tim Draper predicted that the primary cryptocurrency would reach a minimum of $250,000 per coin in the coming year. Draper revealed that he initially made this prediction when Bitcoin was trading at just $4,000 per coin. However, he acknowledged that regulatory challenges have impeded this projection, particularly in the somewhat apprehensive regulatory environment of the United States. Reflecting on his earlier prediction, Draper expressed surprise at the cautious and traditional stance taken by the U.S. He believes that with a more receptive environment, discussions similar to those with El Salvador would be underway. Draper considers the existing delays as a product of outdated governmental thinking and anticipates that his $250,000 projection will likely materialize soon, possibly within the current year. What are your perspectives on the 2024 and 2025 Bitcoin forecasts by both Pal and Draper? Share your comments and observations in the comment section below. Additionally, ensure you show your support by liking this video, subscribing to the channel, and activating post notifications for more content like this. Thank you for tuning in. This isn't merely an investment, it's an invitation to be part of our narrative. Investing means becoming an active participant in the future of secure finance. No cliches, just a sincere invitation to join this collective journey. Share our videos across all platforms: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially leading to more views and increased YouTube revenue.